Welcome. I'm Linda Tuck Chapman, CEO of Third Party Risk Institute, and I am so delighted to be here today with Krystelle Bilodeau. Krystelle is with Canada's Central Bank, and I'm going to ask her to tell you a little bit about what she does because it's quite interesting. But I also want to acknowledge that Krystelle was a major contributor and helper when I wrote the first book, Third Party Risk Management Driving Enterprise Value. And so that's who the book is dedicated to. And so she was my sounding board. She's a brilliant, brilliant woman and a really big thinker. And so she read everything. She didn't edit my words. She asked me questions. We talked about things. And I remember fondly, Krystelle, when we were doing the model risk chapter, how much debate we had about that. That was awesome. I learned so much. So anyhow, Krystelle, could you tell us a little bit about what you do today?
Thank you so much, Linda, and thanks for the fantastic introduction. I'm thrilled to be here, and it's always such a pleasure to work with you. And indeed, we had those debates on model risk with your book, and that was pre-AI. So I think we need to have it again. There would be so much more to discuss. So my name is Krystelle Bilodeau, and I am the Deputy Managing Director for Financial and Enterprise Risk with the Bank of Canada. My focus is really on the enterprise risk side, and I think we'll have in attendance here our head of third-party risk management as well.
Oh, excellent.
So I think he'll chime in, or we'll give him an opportunity. I don't see his name yet, but
okay, perfect. Okay, well, this is totally fantastic. So anyhow, you have a big title. What does that mean? What do you actually do?
It's it's Deputy Chief Risk Officer, really, is what the title would be in other organizations. So that just means that I worry about things. It's kind of funny. I brought my niece in and introduced her to our Chief Risk Officer, and she asked him what he did, and he said, "I'm a Chief Worry Officer." And so I guess I'd be a Deputy Chief Worry Officer.
Yeah, absolutely. So, and you have a great career history. You've been with Canada Central Bank for a number of years. So, and we have been friends and professional colleagues for many years. So my recollection is you were running operations during the pandemic, that you were new to the role, which was like yikeolus. And you were working very closely with the chief administrative officer. So you have a great idea about strategy and operations and whatnot. You got a communications degree. I mean, you're all that in a bag of chips, girl. So there we go. Okay, enough introductions. So today we were going to talk about tone at the top. And the reason why I asked you to be our guest today is because I know this is a passion of yours. And you're a very strategic thinker in terms of how things work in organizations. And I think that's a lot of that's your signature strength, actually, is putting together a lot of complex pieces and making sense of it, but also turning it into something useful so that you can action it. So let's start with a basic question. What is tone at the top, Krystelle?
So I received your questions and put some thoughts together. This was a particularly hard one because it's so many things, but some key components really are having leaders that are clear about what they care about, how they care about it, to what limit it. And so I don't want to use kind of words that are overused like risk appetite statements, but really, really clear about how they feel about it, making it a priority. Then the reward systems have to be in place. We have to make sure that we're rewarding the kind of behavior and recognizing the kind of behavior that we're expecting in the tone that we're setting. We need to have leaders as well that are making decisions that are aligned with that. And what that does is not only state their commitment to their tone, but also empowers leaders and people below them to make decisions in their everyday life as well.
Well,
or in their business runnings.
Well, and it's so broad, right? Tone of the top means a lot of things, but in the world of risk, basically, it's what's acceptable to the organization in terms of people's behavior and how the organization behaves when it comes to risk. So it is hard for leaders to do this because basically the strategy, the risk appetite, or how much risk organizations are willing to take on, that starts at the board level. And in your case, you have a very complex situation because you have, your board, you have the two arms of your organization, right? You have an economic policy and the bank part, right? The fiscal part. You have government oversight, you have day-to-day operations. So, your tone at the top also sets the tone for the country, right? And what happens in the financial services sector. So it's a huge responsibility. So when we start thinking about it, how do you know if the tone at the top, like I deal with a lot of different organizations, sometimes banks, sometimes, insurance and legal firms and food manufacturers and medical devices and like there's so many different types of organizations out there. And, I'm always really curious, like I can't help them from an advisory perspective do the right things in third party risk unless I really understand, like, how does this all work in your organization? And so, what are some of the, like, how do you even know if you're consistent with the rest of the sector? Do you have any ideas about that? Like, how would you know that your organization is either more risk averse or less risk averse or something in the sector that you're in?
Ask middle management.
Okay.
Ask middle management if they understand their how to integrate risk into their decision making. Because oftentimes the front line or the first line has a very clear sense of what their roles and responsibilities are.
Mhm.
And there could be, or oftentimes, a disconnect between their understanding and the tone from the top. And that's often because the middle management is unclear about their roles, responsibilities, and with regards to risk and third party risk management.
Well, one of the things that we talked about, we kind of coined this phrase when we were preparing for this during our conversation. We talked about tone at the top, but we also talked about voice for the bottom, right? So the people on the front line, I can't even tell you how often they'll say, well, this was like a pretty stinky one, but the business said, and that they wanted to do this, et cetera. So that middle component, I think you're right. The people on the front line, they hear it loud and clear. And I would have to say that generally speaking, they want to do the right thing, but often don't feel like they can. And then my experience is, I mean, you're a very senior person. I was a senior person in corporate. When I talk directly to the people who are running the organization at the very top levels, oops, somebody's chatting. Hello. Anyhow, but when I talk to people at the very highest levels, I mean, I remember one of the banks I worked with, it wasn't us, but another major bank had a risk event. I was in front of our executive committee probably 6 weeks in a row. And we were talking about, well, what's our position on this? I worked with one of the strategy executives to figure out, well, what is our position? And we kept going back and checking in. At the top of the house, I would say 99.999% of the time, they want to do the right thing. So you've got your tone at the top and your voice from the bottom trying to do the right thing. Tell me again about what's happening in the middle, Krystelle.
So my observation, many of the conversations that I've had with some colleagues are really around setting up the right governance and setting the tone to accept risk advice, even when it's sometimes stinky, right? And so I think voice from the bottom is making sure that voice isn't being softened along the way. And then it comes in clearly because you're right, everybody wants to make the right decision. We need to make sure that as we're playing telephone, we're ensuring that message isn't changing.
Well, you know what? I know what this feels like too, because having come up through the ranks in a large corporation, right? You go up to, manager and director and VP and SVP. It's pretty political actually when it comes right down to it. So you get this sort of competitive cooperation. And that makes it very tricky because if you see something, sort of that, New York subway thing, if you see something, say something. It's super hard for people on the front lines to actually have their voices heard in a way that feels safe. And then if you're sitting in the middle, especially if you're in a risk function, like, I mean, you're a fairly senior person, but you're in a risk function. And because of that, you have to say, hey, wait a minute, or I don't think so, or whatever. That takes a lot of courage. Now, you are very, very, very careful in your communication, and you're also very considerate. but how do you say no to people? Because I hear this all the time. The business wants to do it, and so they just accept the risk, right?
Yeah, there's so much to unpack in your question. I want to talk about culture. This is where culture becomes
Yeah.
particularly important, and ensuring that we have a culture, it's culture can only live with tone from the top, right?
Yeah.
Because we need to reward those really brave communications that sometimes we need to have. So tone from the top will enable that culture, and then we need to have a culture where people can feel safe and comfortable having some real conversations. And your comment about saying no, I think what we want to do is say how, and
So
that's
right.
go from challenge to business partner, business enabling, and looking for solutions or conditions under which we would be comfortable.
Right.
And having those conversations and changing that tone is really core to building the right culture.
Well, you're talking to the right person here because I actually don't hear the word no really ever. I mean, just ask my husband. It's always not right now and not this way. That's what I actually hear when I hear the word no. And I think that that is really what you're talking about is enabling the business. I mean, we can't forget that as risk specialists, our job is to help the organization make risk-informed decisions and to help the business function, right, in a relatively safe manner. So, can you talk about any mechanisms that you have for encouraging the collaboration in a way that feels safe to people?
Mechanisms in particular, I think it's really
I'm thinking,
important
yeah, I'm thinking
at
about
the
sort of
right rate.
say. I'm sorry, I interrupted you. Say that again.
No, I think it's important to have the right relationships, right? Ensure that we're clear about the intent of risk management.
Mhm,
And businesses are experts at running their business.
mhm.
And, we don't expect them to be looking at all angles. I think we're there to ensure a safety net. We're there to partner with them. We're there to make sure that the objectives that they're striving for, they're going to get there as efficiently and as safe as possible so that there are no hiccups that would prevent those objectives. So leading with intent, having the right relationships, and understanding the business. It's important to put some elbow grease to understanding the nuances and the context that they're operating in so that we can be most useful in the advice that we provide.
That's one thing that it sounds really obvious, but I've seen a lot of gaps there. So certainly when I was in corporate, I always felt it was my responsibility, especially when I mean, I was in a bank. Banks are super complicated, right? They're very complex organizations. I always felt it was my responsibility not just to have like a town hall to say what was going on, but to explain elements of the business. How does the business work? How do they make money? How does the bank make money? What does all this information mean? Because I think if you don't understand the business, I don't know how you can really help them. And they will treat you like a risk nerd. I mean, I've seen this in action, right? Where somebody might come into a room and give them a bunch of advice. And I saw this actually one time in a meeting where the senior executive said, okay, you go do that because we need to actually comply with what they're telling us to do. And the rest of us, let's get on with it. I mean, they actually said those basic words. So I want to go back to this concept of challenge. Growing up in the financial services sector, the notion of an effective challenge is something that regulators actually do govern. They expect to see it. They expect to see documentary evidence, and so on and so forth. Can you talk to me about this notion of challenge? Because I can tell you, outside once you step outside of financial services, people do not want to hear those words.
Yeah, well, I can't say how regulators are actually doing this because I'm not a regulator, but I can say that my interpretation of an effective challenge is about independence of thought and independence of voice. And I think as long as we have those independences of thought and voice, that we are providing effective advice. And that's how I would position that.
Yeah, and
What's really interesting, though, and I want to go back to your comment about
yeah.
understanding the business because it triggered in me kind of the thought that we're only going to get asked for advice when the advice we bring is relevant, so and useful
Isn't
and
that true?
helpful. So your example of the risk nerd who comes in with a bunch of recommendations some of them felt relevant, but it doesn't seem like it felt necessary. It was a compliance checkbox, and that's that culture piece. Yeah.
Well, and that in itself is maybe an indication of culture. So it's when you start at the very top of the organization. Lots of has happened in the last few years. So like composition of boards has changed a lot, right? There's been all kinds of requirements for better independent governance, for term limits, for better representation on boards. So they're not like clubs of executives from other organizations anymore. There is an expectation that the representation on your board can deal with a lot of different issues. Right. So that's why a lot of times they're looking for risk people and tech people and HR people, et cetera, to make sure their board composition can deal with the totality of their business. So it starts there. If you have a good board, the next layer down, though, I think a lot of times, especially in third party, this is actually quite true, but the number, maybe I'm not as good as explaining it as I thought, but I can't even tell you how often I've talked to senior executives, including CROs, chief risk officers, who don't really understand the complexity of third party, right? So if you think about any organization today, the core of your internal resources compared with the number of third parties that you rely on in larger organizations is disproportionate. Depending on your industry, it can be really disproportionate. So you may have 50,000 employees, but 100,000 third parties. Right. So trying to explain the life cycle and how you get all the pieces together, I'm very big on process-driven practice. So I want to go back to something you talked about a few minutes ago, which is really the characteristics of organizations with strong risk cultures that are actually translated into some indications internally. One of the ones we talked about was tying compensation to risk capabilities. Right? Are there any others that come to mind that you could share that would be a way that companies try to control or at least have very clear indicators of what the tone of the top is supposed to look like in action?
Strong governance. I think strong governance is a key one, especially when we think about third parties.
Mm-hmm.
As you're right, the world of our third parties, the complexity of our third parties, it's changing, it's growing, it's evolving. And in the past, a contractor owner would be responsible for accepting risk, right?
Yes.
It's a fairly new field, and this is where we started. And I think what we're talking about more today is saying, these risks are so much more cross-cutting across our organization that if there are some areas where we're introducing risk while trying to reduce risk in another area or gain business benefits, probably more than one person has to accept that risk, understand that risk, and be responsible for managing it. And so we're seeing more and more the need for governance to inform that bigger, more strategic view organizationally.
Okay. So as Deputy Chief Risk Officer, how are you informed something's happening that should have your organization weighing in on it?
I have a very strong team in third-party risk management that can keep me informed of everything, but they also follow the governance and the process, right? They're there
Mm-hmm.
at every step, and that's great because they have a really strategic view of these things and are there and present to inform on what risks need to be accepted by whom.
It's kind of interesting. So next week we're filming a new course I don't know if it's going to be 4 hours or 5 hours on the essentials of third-party cybersecurity risk. So we've been kind of looking through all of the different elements of this and trying to figure out, how do we put controls in the right place? How do we make sure that people are involved? And you make a very interesting point. I mean, before third-party risk became a thing, which is not that long ago, the business always could just go ahead and drive the business forward. They can engage whoever they like. So then we bring in third party and you get a lot of people in the business saying, okay, it's a renewal. Why are you bothering me? Or why are you here? Because I can run my business, right? So we had to bring in process-driven practices. And so, looking at these deficiencies and who needs to weigh in on it, I think cyber is leading it without a doubt, because the cybersecurity professionals actually can say this risk exceeds our risk appetite. This is not acceptable. right? So that's the first indication that others can wade in. I think that's been around for quite a while though, huh? I mean, that doesn't seem like a new thing. But really, where we're seeing that this is expanding is, I mean, think about potential for financial crimes. So that the bank that shall not be named is in big trouble right now for anti-money laundering problems. Now, this is not a third-party problem, as far as I know. But if you think how hard it is to train an entire workforce and put the right controls in place, at the end of the day, you have to have a good program and good practices. So people know that there's something come up that somebody else should be waiting in on. So one of the things we're putting in our cybersecurity course is what are those high impact controls that have to be strong as a key indicator. So, it basically, I'm guessing that your program, I don't want you to telling us anything about it because you are a central bank, but I'm guessing there must be mechanisms in your process-driven practices that say this needs to come to enterprise risk management, or this needs to involve financial crimes, or another group. So in a more generic way, could you just comment on that, please?
Yes, our governance process and our program, which is the life cycle approach, and our due diligence process is absolutely bring all the key stakeholders together and let them opt out as opposed to opt in.
Oh, that's interesting. That's
Yeah,
interesting. So they have to say that they don't need to be there, as opposed to the other, which is I need you at the table.
pretty
So
much.
yeah, I like that actually. That's a really good idea, Krystelle. Now, another thing that I think is super hard for people who are risk specialists is actually calling it, saying, I don't think this is okay. Right. So they're not exactly what I would call voice at the bottom. They're kind of in that middle ground. What's happening there?
Well, I think what we really need to do is support them with culture and tone at the top, but also equip them with some clear methodologies. I want to remove that kind of it's just Bob who thinks that way. And if
Mhm.
Sam would have looked at it, we would have had a different outcome. So make sure they have the proper tools and methodologies to be able to bring these things forward in a safe way.
Oh, that's true. And these abstract methodologies have got to go, right? So open, sort of open text responses to due diligence and whatnot. That is a good way to get inconsistent in your organization. So now, why is it so hard for people at the bottom to hear at the top that they really truly want to do the right thing and they should be sending things up? Because when I work with people on a day-to-day basis, I see that fairly often, right? They know it doesn't smell right, but they really don't want to do anything with it. Like, why why is that happening so widely?
I can guess from the conversations I've had with other risk experts is we're not recognizing that enough.
Yeah, and I
And
think that basically, I'll be honest with you. We're not talking about whistleblowing, right? I'm not sure even I would want to be a whistleblower because lots of times bad things happen to whistleblowers. I've met a few actually in my travels that I'm thinking, oh man, I bet you wish you didn't actually say anything. But those are things like usually major corruption and whatnot. I don't know. Anyhow, that's it. We're just talking about like this isn't right, and should somebody else look at it? Right. So I like these oversight committees and structure and whatnot to make that actually happen. Okay, I'm going to go back to something about risk appetite because you can't really talk about tone at the top unless you talk about risk appetite for the organization. And I know you've got a very, very lengthy risk appetite statement on your website as a central bank. But can you sort of distill it down? I mean, what is risk appetite?
risk appetite is risk appetite is a tool.
Okay.
Essentially, it is a
Yep.
tool that everyone in the organization can use to make daily decisions with regards to their business and know when and how to escalate. So I think that when we're thinking about solid risk appetites, they're strategic and linked to our strategic objectives, and
Mhm.
then very clear in terms of limits. And probably in a more regulated area, they're gonna be more tolerances of how much risk we're not willing to take.
Yep.
And in some less regulated areas, you probably have more statements on balancing reward and opportunity and benefits for the business while taking on some more risk. So
Well,
they,
yeah.
they will vary.
Well, and you make a good point. We're not trying to get in the way of business. We're trying to make business run better, right?
Yeah.
Because if you have a risk event, it's expensive, it's very time consuming, it hurts your reputation, like it hurts your bottom line, etc. I mean, risk events are really something you want to avoid. But when you go back to risk appetite, one of the things that I see organizations really struggle with is trying to define risk appetites in terms of the tolerances, which are in fact their key risk indicators. So a key risk indicator is different than a key performance indicator in my mind in the world of third party. To me, the performance indicators are more about the performance of the program itself, right? Because you're looking at, is it working? Are people using it? Is it producing the right outcomes? Are we, do we have risk events we should have detected before they happen? So that is the KPI. The KRIs are the risk indicators for the actual third party risk itself. So I'm not sure why, but people really do struggle to try and define what they mean. And so what do you think is happening? Like, why is that so hard?
It's hard to get it right. All of this is so new, right? So we can't, it's an art. We have to try some key risk indicators on to figure out which ones are relevant and actually doing what they're supposed to be doing, which is the early warning signals of some risks coming to materialization. And I think it's hard to get it right. And that iterative process is still something that is quite new.
Well, I think that your KRIs are always going to change, but I hear you loud and clear. I mean, when I work with organizations and look at what they're trying to measure, A, you have to have the data, right? So that you have to have a good program. And B, it's trying to figure out, does this risk indicator support our risk appetite? So some of the ones I see that actually do work are things like, well, how much high cybersecurity residual risk will we accept? How often will we onboard without actually going through all of our, the program that we're supposed to be putting in place before they're onboarded. Those things actually are indicators of risk. But you make a great point, Krystelle. Setting the limits, I think, a little bit of spaghetti against the wall these days.
And they're still imperfect, right? We think about, how many contracts we were okay to have with high cyber risk. Well, it depends on which ones.
It doesn't,
so
though.
Really hard. It's
It
really
is, yeah. Well, it's interesting. So some of the current thinking that I have on this is actually, it comes back, I'm very fixated on relationship segmentation as well to help make sure you stay within your risk appetite and that the tone of the top, everything's consistent. So I've been really advocating for this separation of operational dependency, right, which is an inward view, how much you're relying on this third party, from the exposure to risk. I think that creates, instead of a graph, it's like a matrix you can imagine with your dependency levels and your risk levels. That makes it a little bit easier to grasp the data. And I actually think it's easier to build KRIs around that, because the ones that are the most important should be the least risky. And the ones that are the least important, why are you taking on a lot of risks? There better be a reason. So I'm finding that actually helps, in my mind anyways, when I'm talking to people, helps them to sort out what they really mean. But the limits themselves are they're really tricky. So now, are there any other risk oversight practices? Actually, there is one I want to ask you about. A couple of years ago, we did a talk about knowledge transfer in organizations, and you had some very, very forward-thinking ideas about that. And I think that this can certainly lean in very nicely into our talk in Tone of the Top. So can you just talk about sort of like today's environment and trying to share information, how you bring people up to speed on what's what?
I think at the time we were doing some work in terms of changing workforces and a large exodus, right, of retirements that were coming up. And the thinking at the time was, oh my goodness, if they walk out the door, are we in trouble? How do we start to transfer that? And it was, we had a bit of a key control approach to it, where we were thinking about what are the really key elements that need to be shared. And then we were building around that more people at the table for those specific things so that the information would be naturally shared. And so I would apply that today in terms of of risk sharing and risk knowledge, the more people you can have around the table for the very important risks, the more they'll be understood and the more they're going to be well managed. So that's the
Yeah.
approach.
Well, and we're trying to figure this out actually from a training perspective, right? We have a certification program, we have an essentials program. I think that what we're going to start seeing is a little bit more, it's probably going to look a lot like compliance training, right? Because these workforces are pretty huge. And so a lot of organizations, you already have to take like anti-money laundering and privacy and security and whatnot. So these are usually pretty lame, pretty lame the way they're set up. I don't know why they almost always use these characters as opposed to people, but they share information and then they quiz you on it, and you have to get like 80% or so to comply. And they send these out every year. I'm kind of thinking that might show up for third party and for, things like risk appetite. Trying to communicate risk to a large changing workforce is pretty tricky.
Yeah, but that context is the critical piece. Otherwise, it does become a checkbox exercise. And so, creating a forum for discussion and context is probably the most important for knowledge transfer. But also in third party risk, we have such an evolving environment. It's getting more complex. It's also getting more concentrated in some areas. And having continuous dialogue around that is super critical. It can't just be a checkbox exercise that we send out every year because it's so different from year to year, the landscape.
Well, and your personal management style, Krystelle, I think is really what we would like to see a lot more of in the future. I mean, you've always been operating this way, but one of the things that I really like about your style is that you do recognize that people, they at all levels that they should be informed, they should be part of discussions and decisions. And I've also seen you in previous roles in particular where you were managing large outsourcing contracts, that you also very much engage your third parties in discussions so that you can stay close, right? I see a lot of times that all the turnover that's happening in your organization is happening in the third parties, and then multiply that by 100,000. And you can see how much change there is, not just the structure of your own organization and how many third parties and what they're doing, but inside those third parties and how they're using third parties. And it gets basically, there's just so much going on all the time that if we step back and say, let's calm down and figure out how to sort this out, it is communication. So maybe we can talk a little bit about how you would recommend interacting with a very important third party to make sure that they're connected to the tone at the top in your organization.
Yeah, information is information is power, right? We empower all of our employees and business partners if we're clearly communicating what's relevant and all the context around it, because they then make better decisions as well. So the more we do of that, the better. In terms of interacting with key outsourcing partners, is really making them partners, being really clear on what my objectives are, on what my reward system is, and understanding theirs so that we can help each other get there, and we can ensure that those incentives are really aligned. And if they're not, then we can realign them.
And I can't certainly, I mean, the number of people just rely on one line text to communicate, it boggles my mind. I mean, even members of my own family say, like, why wouldn't you just pick up the phone, right? I mean, a conversation, it means so much. So I think back to, years ago, you told me that you always safeguarded some money in your budget so you could get together in person with some of your critical third parties on a periodic basis to make sure that you had some icebreaker, you got to know each other. I mean, there's nothing like knowing one another and your challenges to break down that, basically the barriers that do exist, especially if a problem arises. If you know that if you know the person in the other organization, you're much more likely to get things solved quickly because you don't have to get past that first barrier of like, who are you and how can you help me? So I think your practices there, Krystelle, there's things that we can learn. I mean, one of the weakest areas in third party these days is still, once the contract is signed, we're pretty good at getting there. But once the contract is signed, it goes off to the business, and that's that. So a lot of organizations that I work with, they don't have any specific requirements out in the business for once you have these third parties. And I think that's kind of nuts, actually. Why wouldn't you not run the business, but set the parameters in terms of how you provide risk oversight so that things don't get out of whack? Anyhow, that's just my little soapbox I'd like to get on there. So how'd I do?
Excellent. You're right. It is a challenge. It is a challenge because then we outsource the risk to the business who's focused on getting the business done, right? How do we do a better job at supporting them there?
But I just want to go back to the middle for a second, because this is really where the heart of the challenge often lies. Right. So we're talking about middle management, executives, not the ones running that, sort of top of the house. But, how can we give them, make it easier for them to do their job and not be afraid to do the right thing is a question. So you talk about compensation.
Come from the top, right? A culture that is rewarding of risk management. And that doesn't have to be compensation. It can really be thank you for raising that. That was really important to our decision. It can just be recognizing that the risk has been raised and explaining why we've accepted it, even if it felt outside of our risk appetite from one perspective. So providing the right tools, providing methodologies so that people don't have to own bad news necessarily on their own. Those are all key pieces of that, and then a really strong governance process around it.
Yeah, and when we were preparing, you used the word transparency, and that's a really important element as well. Now, when I was writing the first book, I talked to the CRO at Black Knight, which is one of the largest mortgage processors in the US, and 50% of executive compensation was tied to their ability to manage risk. That's a pretty strong statement, huh? So and so I think that, everybody is a risk manager, and it would be kind of helpful if people had at every level, had some accountability for risk management and their goals and their metrics and their own compensation, because I think that managing risk is actually the way that business happens. So anyhow, Krystelle, I've really, really enjoyed our talk. Is there anything that you'd like to share? Any final thoughts and things we haven't covered that you'd like to?
My final thought is we should continue to have this conversation all the time, because I learn every time, and it's fantastic, and there's so much to talk about. Thank you for having me.
Thank you.
Inviting me.
Well, I'm a super fan, Krystelle. So this is Krystelle Bilodeau. She's with Bank of Canada, Canada's central bank. In her current role, which is relatively new, she's a Deputy Chief Risk Officer. But believe me, you have so much depth and breadth that you are my personal sounding board when I want to think things through and understand, even what I do, where I should think about things. So Krystelle, I mean, you're wonderful. And I love your communication style, that collaboration. If we can see more of that in risk and compliance and audit, that collaboration and cooperation and really ability to listen and to think and to share. I mean, if there were more of you out there, I think that our corporations would be better places that run better and also respect and support the tone at the top. So thank you so much, Krystelle. And thank you everyone for joining us. And so this will be on YouTube and in our resource center. And people seem to like the longer, as I said, people like the longer recordings. So anybody who wants to send in any comments or anything, we're happy to listen to what you have to say, share ideas. I can always ask Krystelle anything you want answered. And if you have any suggestions for future Ask the Expert and guests, we're all ears. So thank you very much. I'm Linda Tuck Chapman, CEO of Third Party Risk Institute. Enjoy your day.